Dive into urgent financial warnings and golden opportunities ahead. Discover expert insights on the unsustainable debt crisis and why gold may be your hedge against economic chaos. Learn from top venture capitalists about the unprecedented investments surfacing in today's market and hear unmissable predictions for Bitcoin and tech stocks. AI-driven insights reveal all. Watch now to navigate these turbulent times wisely. Today, on Financial News in Review, we will summarize the following videos. From Adam Taggart, Thoughtful Money, we have Unavoidable Crisis Ahead. We have Too Much Debt That We Can't Afford, Matt Piepenburg. From Blockworks Macro, we have Venture Capital Recession has created compelling opportunities, says Superinvestor Fabrice Grinda. From Kitco News, we have French President Emmanuel Macron's election gamble. From Kitco News, we have This Is What Investors Need to Drive Gold Higher, Will Rhind. From David Lin, we have Is Bitcoin Crashing 50%, Repeating 2021? This is the Floor, Year-End Target, Aaron Dishner. From David Lin, we have The End of Fiat Currencies as We Know It, Gary Wagner. In this Thoughtful Money episode, host Adam Taggart brings in Matt Piepenburg, a financial expert and partner at Matterhorn Asset Management, to discuss the impending financial crisis facing the U.S. due to unsustainable debt levels. The core thesis of the video emphasizes the unavoidable financial crisis stemming from America's extensive and unsustainable debt, which is predicted to trigger significant economic challenges alongside potential inflationary spirals. Piepenburg asserts that the immense debt burden, coupled with the declining trust in government leadership, is setting the stage for drastic economic corrections and potential currency devaluation. Here are the key points discussed by Matt Piepenburg. Debt crisis. The U.S. public debt has surpassed GDP, currently at around $35 trillion, with unfunded liabilities also skyrocketing. Globally, the debt figure reaches approximately $400 trillion. Such staggering levels lead to questions about sustainability and repayment capacity. Historical examples and economic theories illustrate that unsustainable debt loads ultimately collapse, affecting markets, currencies, politics, and social structures. Economic austerity. Given the divided and tribalized political landscape, America lacks trust in its leadership, which complicates the implementation of necessary austerity measures. Reshoring manufacturing and jobs requires brutal austerity and a populace that trusts their leadership. Currently, that trust is notably absent. Currency and gold. While fiat currencies are reaching their endgame due to excessive printing and lack of real productivity, gold remains a stable store of value. Central banks around the world have been shifting towards accumulating gold while reducing their exposure to U.S. treasuries, indicating a moving away from fiat currency. Matt Piepenburg made the following predictions: debt-driven economic crisis. Matt expects an economic crisis fueled by the unsustainable growth of debt, with figures expected to rise up to 6 to 10 trillion more in the coming years. The impact includes widening deficits, inability to curb inflation due to necessary fiscal spending, and declining purchasing power of currencies. Gold price surge. With fiat currencies' impending collapse, the demand and price for gold are predicted to rise significantly. Experts predict that gold could see 5-digit prices, serving as a hedge against the melting value of paper currencies. Matt Piepenburg emphasizes the need for caution in the current market conditions, advising viewers to consider the broader implications of fiscal policies and debt dynamics. He highlights the importance of gold and other tangible assets as means to preserve wealth amidst economic instability. While acknowledging the complexity of the situation, Piepenburg calls for informed judgment and long-term thinking to navigate the forthcoming financial disruptions successfully. Welcome to Blockworks Macro. In today's engaging discussion, we have an outstanding guest, Fabrice Grinda. Fabrice is an entrepreneur and investor with an impressive track record involving major companies such as Airbnb, Alibaba, and FanDuel. He founded companies like Auckland and OLX and is a serial angel investor. Today, Fabrice will delve into the current state of the venture capital market amidst recession fears and how it has created exciting opportunities for astute investors. Any potential biases? Well, Fabrice is deeply rooted in the venture capital world and tends to stay optimistic about its future. The core thesis of this video revolves around the idea that the current venture capital recession has birthed some of the most compelling investment opportunities in years. According to Fabrice, the boom and bust cycles in venture capital influence entry and exit points significantly. By analyzing macroeconomic trends and historical data, he underscores that economic downturns usually precede the most profitable periods for venture investments. Here are the key points discussed by Fabrice Grinda venture capital cycles. Fabrice explains how macroeconomic cycles impact venture capital by creating varying price points for entry and exit. He recalls taking a cautious approach during the 2021 bubble, choosing to divest rather than jump on the bandwagon, based on the belief that loose fiscal and monetary policies had inflated asset prices. Current market conditions. Grinda emphasizes that while many in the VC world have tightened their purse strings, he sees the current period as a golden opportunity to invest due to more reasonable valuations and less crowded markets. He points out that founders today are more focused on unit economics and burn rates, making them more sustainable in the long run. Historical perspectives. He highlights that the best venture investments were made during the aftermath of financial crises, like those in 2008 to 2010, suggesting that the worst time to invest might have been 2021, and the best might be now until the market turns around. Fabrice Grinda made the following predictions: economic cycles and market potential. Grinda predicts that we are likely at the beginning of a lucrative period for venture capital investments, akin to the opportunities seen post the Great Recession. He foresees that the all boats rise effect won't suffice. Instead, we need to focus on sectors and companies that are fundamentally strong and well managed. Technological advancements. He anticipates that technology, especially in AI and robotics, will continue to be a massive growth driver, solving global issues from climate change to inequality, further emphasizing why now is the time to invest. He mentions specific examples like robotic companies in logistics and warehousing as next big things to watch. Fabrice Grinda concludes by reiterating the vast opportunities unfolding in the venture capital space, particularly in times of economic downturn. He encourages investors to seize the moment by investing in companies focused on solving significant global issues with technology. His ultimate call to action is clear: venture out into venture capital now. The conditions are ripe for those willing to look beyond the immediate economic hardships. Welcome back to Kitco News. In today's episode, we dive into a compelling political and economic analysis with expert insights on the recent strategies by French President Emmanuel Macron. Our guest discusses how Macron is maneuvering through the complex landscape of France's upcoming elections and the European economic climate. The core thesis of the video revolves around French President Emmanuel Macron's high-stakes electoral strategy. The discussion emphasizes Macron's gamble, where he appears to be positioning his government to make tough economic decisions in the short term, potentially to set the stage for a political advantage by the time the presidential elections come around in 2027. This strategy hinges on increased taxation or reduced spending, which might be unpopular in the short term, but could deliver long-term political gains. Here are the key points discussed by unnamed expert economic strategies. Macron faces the dilemma of increasing taxes or cutting public spending, much like other European governments. These economic measures are necessary, but could result in political backlash, making them highly unpopular among voters. Le Pen's potential impact. If Marine Le Pen's party gains a majority, they will also face these difficult economic decisions. The guest suggests that this could play into Macron's hands in the 2027 presidential election, as he could argue that his opponents created economic chaos. UK election parallels. The guest draws parallels between France's current situation and the UK's upcoming elections, highlighting shared economic challenges across Europe. Unnamed expert made the following predictions. Macron's long-term gamble. Macron's strategy may backfire if the public sentiment turns overwhelmingly negative due to the economic hardships caused by his policies. Conversely, if the opposition struggles with the same economic issues and fails to manage them effectively, Macron could capitalize on this in 2027. The guest concludes that Macron's election gamble is a high-risk, high-reward strategy. By taking bold, Albeit unpopular economic measures now, Macron hopes to position himself favorably for the 2027 presidential elections. However, this approach could either lead to political vindication or significant backlash, depending on how the economic situation unfolds and how it is perceived by the French public. Hey everyone, welcome back to Kitco News. I'm Jeremy Safford, and today we have a fascinating discussion lined up. We'll delve into the surge in U.S. equity markets, the boom in tech stocks, and an equally compelling rise in gold and silver prices. To help navigate these complex market dynamics, we're joined by Will Rhind, the founder and CEO of Granite Shares, a firm managing over $6 billion in assets. Will brings a wealth of knowledge in both equities and precious metals, ensuring a grounded yet insightful discussion. The core thesis of today's video revolves around the diverging fortunes of U.S. equities and precious metals. While tech giants like NVIDIA are reaching unprecedented market valuations, we're simultaneously witnessing significant upticks in gold and silver, led by heightened geopolitical tensions and inflation worries. Will Rhind offers insights into the market stability, potential risks, opportunities, and how investors should adjust their strategies accordingly. Here are the key points discussed by Will Rhind: economic indicators and market performance. Recent economic data shows troubling signs, including a slight contraction in consumer spending and an unexpected dip in core inflation. Rhind interprets these figures as potential early warning signs of an economic downturn. Tech stock concentration. The S&P 500 is hitting record levels, heavily driven by a few tech giants, particularly NVIDIA, which has become the world's most valuable company. With NVIDIA's growing market cap, the firm's rebalance could place NVIDIA at a weight of around 20% in tech sector funds. Diversification strategies. Despite the risk-on market attitude, gold remains resilient, maintaining attractiveness alongside cash as diversifiers, especially with central banks ramping up gold purchases. For a substantial increase in gold prices, more market fear is needed. Retail investor behavior. Rhind notes that retail investors currently prefer equities due to their robust performance, but a vast amount of cash remains on the sidelines, potentially entering markets if interest rates drop. Will Rhind made the following predictions: gold price increase. Rhind foresees that gold could rise to a new all-time high, potentially hitting $2,500 before year's end. He bases this prediction on at least one anticipated rate cut by the Federal Reserve and a declining U.S. dollar. Continued tech dominance. With NVIDIA and other tech giants posting robust revenue numbers, Rhind predicts that these companies will play a crucial role in driving market dynamics, provided they can maintain their growth trajectories. In summary, Will Rhind emphasizes the need for cautious optimism. While tech stocks, led by NVIDIA, remain hot, the sustained resilience of gold and silver indicates underlying uncertainties in the market. Investors should keep a diversified portfolio, balancing equities with assets like gold. Upcoming rate cuts and geopolitical tensions could be pivotal in shaping market directions, so staying informed and flexible is key to navigating these fluid conditions. Welcome to the David Lynn channel. Today, we have a special episode featuring Dishner, co-founder of the Better Traders. We'll dive into the world of Bitcoin, Ethereum, and the broader crypto markets. Aaron is not only an expert in crypto market analysis, but also a pioneer in bot trading. While he brings a wealth of trading experience and data-backed insights, it's important to note that he is inherently bullish on Bitcoin and cryptocurrencies, which could imbue his analysis with a positive bias in favor of these assets. The core thesis of the video is centered on the short-term performance and future prospects of Bitcoin and Ethereum, amidst the backdrop of evolving market conditions and regulatory developments. Aaron delves into the technical analysis of both cryptocurrencies, makes price predictions, and introduces the audience to bot trading as a viable strategy for navigating volatile markets. Despite his cautious optimism, Aaron outlines key resistance levels and market behaviors that could affect Bitcoin and Ethereum's price movements. Here are the key points discussed by Aaron Dishner. Bitcoin and Ethereum market dynamics. Bitcoin's retracement from its all-time highs to around 60,000, 64,000, and the current sideways movement suggesting the market is awaiting a breakout. The positive impact of the SEC's recent appeal towards Ethereum, causing an uptick in ETH's price, outperforming Bitcoin by a small margin. Significant levels of resistance for Ethereum at $4,000, with challenges in breaking above this threshold despite previous positive ETF news. Influence of news and indicators. The importance of news in driving Ethereum's price movements, evidenced by historical 20% daily returns linked to ETF approval news. The reliance on technical indicators like the TBO, trending breakout indicator, and Fibonacci retracement levels to predict market behaviors and identify support and resistance levels. Current market conditions and predictions. Bitcoin experiencing bearish consolidation, but remaining bullish in the long term due to strong market fundamentals and resistance at $72,000. A large amount of short positions likely to drive a price surge if Bitcoin surpasses $72,000. Aaron Dishner made the following predictions: Bitcoin price targets. Aaron forecasts a year-end Bitcoin price high potentially reaching $100,000, although breaching this level would be challenging due to psychological and technical resistance. Skepticism towards predictions of Bitcoin hitting $150,000 by year's end, emphasizing that $100,000 is more realistic and likely to act as a formidable resistance point. Ethereum price movement. Ethereum expected to face significant resistance at $4,000, with potential to break higher if prevailing market conditions remain favorable and further positive news emerges. Aaron Dishner concludes that while Bitcoin and Ethereum show promise, there are significant resistance levels they must overcome to achieve higher valuations. He emphasizes the value of technically driven market analysis and strategic use of trading tools like DCA bots to navigate market volatility. Ultimately, Aaron urges the audience to be cautious and consider both technical and psychological factors when making investment decisions, proposing that proper risk management and a well-rounded trading strategy are crucial for success in the crypto market. Welcome back to another insightful episode on David Lin's channel. Today, we are diving deep into the future of fiat currencies and the burgeoning influence of gold and AI on the global economy. Our esteemed guest is none other than Gary Wagner, the editor of thegoldforecast.com. Gary brings a wealth of knowledge about gold markets and economic trends, with a track record of astute analyses. As a gold enthusiast, his perspective is well-informed yet potentially biased towards precious metals. In this thought-provoking discussion, Gary Wagner presents a compelling thesis. We are witnessing the end of fiat currencies as we know them. As technological advancements and economic disruptions reshape the financial landscape, fiat currencies are losing their purchasing power, while assets like gold are gaining prominence as stable stores of value. Here are the key points discussed by Gary Wagner. Inflation and Federal Reserve policies. Inflation has declined from 9% in 2022 to around 3%, yet the Fed is insistent on reaching its 2% target. The Fed faces a dual mandate: controlling inflation and maintaining maximum employment, creating tension in their policy decisions. While inflation data shows positive trends, the job market remains robust, complicating the Fed's decision-making process. Economic and consumer sentiment. Consumer sentiment has been trending down despite favorable inflation data, indicating underlying economic uncertainties. Gary highlights the decline in purchasing power amongst middle-class Americans as a key factor in diminishing consumer confidence. Impact of AI and technological disruption. AI technology, particularly from companies like NVIDIA, is poised to be as transformative as the Industrial Revolution. This technological leap will streamline businesses across sectors, potentially boosting the economy while disrupting the labor market. Gold as a future currency. Gary argues that gold is increasingly viewed as a currency and a stable store of value amidst the devaluation of fiat currencies. Central banks, including those of China and India, have significantly increased their gold reserves, reflecting a shift away from fiat reliance. Gary Wagner made the following predictions: Federal Reserve rate cuts. Gary suggests the Fed might implement 1 or 2 rate cuts by the end of the year, despite current market optimism for more substantial cuts. Continued technological dominance. Technologies like AI will continue to drive significant economic shifts, with companies at the forefront reaping substantial gains. Enduring value of gold. Gary anticipates that gold will maintain its value better than fiat currencies, serving as a preferred asset for wealth storage in the long term. Gary Wagner concludes with a powerful assertion. The era of fiat currencies is nearing an end, and gold is poised to serve as a more reliable store of value. He urges viewers to consider the deep-seated economic changes driven by technological advancements and the strategic accumulation of gold by central banks. As we navigate through these transformative times, diversifying into assets like gold becomes not just a hedge against inflation, but a strategic move towards financial stability. Across these videos, experts agree on the looming financial challenges posed by unsustainable debt and the shifting value of fiat currencies, advocating for gold as a stable investment. Opinions vary on the timing and impact of these crises, with venture capitalists emphasizing today's rare investment opportunities amidst market downturns. Predictive insights advise cautious optimism and diversification, emphasizing informed judgment and long-term thinking to navigate economic uncertainties. Stay ahead by balancing your portfolio with emerging sectors and traditional safeguards. Thanks for watching Financial News in Review for June 20th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see, drop a comment below. See you next time.